Well, thank you very much. We are really proud to be a partner of Monoova. It's been a really exciting journey. I'd forgotten that it was a bit over 3 years. I do remember the day that you revealed your new name, and it was so creative, and we were really proud to be part of that journey. And thank you for having us here today. I'd like to talk a bit more about what's sitting behind PayTo, and I think that it'll really show that the capability, and this is one of the reasons why Cuscal's chosen to work with payment service providers that really turn the payment infrastructure that we're able to bring into payment solutions that businesses are able to benefit from. And when you see the capability that PayTo delivers matched up with the features that Tim's talked about, I think this is actually going to be quite a milestone for the Australian banking and payments industry. Oops, sorry. So if we think about what Monoova and what others are bringing to PayTo and where PayTo fits in with NPP, because we hear about NPP and we hear about PayTo, we hear about different connection models. Well, what does that all mean? Well, effectively, PayTo is a feature of NPP, but as Christian highlighted, it's probably what really the future of NPP and the future of account-to-account payments will be based on. So NPP provides the underlying payment services that have funds moving between two accounts, and you can see that in the payments block here, that you've got banks and payment service providers like Monoova that have funds on deposit and funds that they're managing on behalf of their customers. And what PayTo does is sends the instructions to those banks and those payment service providers to ensure that the funds move between the designated accounts. So that's the difference then between where Monoova comes in as a payment service provider and then just the payment orchestration. And you'll see different levels of processing. And that will make sense when we start to talk about CDR, because CDR has that piece coming up in the future of payment initiation. And that's why PayTo is also the first step, not just towards making NPP reach its potential, but the first step towards also having CDR reach its potential as enabling payment experiences. So let me talk about and show you a video that says, well, what will consumers experience? Your customers, the customers of your customers, what is going to be there in the market that people will see and believe? And then how could you as businesses or Monoova customers, or what is Monoova doing to bring that to the life?
Introducing PayTo. With PayTo, you can use your bank account to pay your way. Pay directly from your bank account for recurring bills, subscriptions and memberships. With PayTo, you can pay directly from your bank account for things that previously needed a card, like for online shopping, or when using apps like food delivery or rideshare. You can see and manage these payments within your existing internet or mobile banking. Using PayTo is easy. Set up a PayTo agreement with your BSB and account number, or better still, your Pay ID. Then approve the agreement in your existing internet or mobile banking app, making it a safe way to pay. You can manage all your PayTo agreements in one secure place. You'll be able to see when a payment is due, the amount and who the payment is for. You'll soon start to see PayTo as an option for all kinds of payments. Whether it's for your electricity bill, flight, TV subscription, or funding your digital wallet, choose PayTo and take the hassle out of payments. Find out more from your financial institution or visit payto.com.au.
Well, I do want to acknowledge the team at NPPA have really been able to summarise that and capture the capabilities that PayTo brings in a really nice, succinct fashion. And if you do go to payto.com.au, you can see more of those broader capabilities that your customers will be able to get the benefit of when they're doing payments through to your accounts as well. So, just to summarise then, some of those key capabilities that set PayTo apart from the way that transactions work now, and highlight some of the features that people will value that address the pain points. We'll talk a bit more about some of those pain points later in the panel. But it's seamless, it's digital, it's real-time, and it's efficient. But it is quite complex, and it really does mean that it's a service that needs to be managed. And I think what I like about what Tim talked about is that there's all these layers. So when you try to address lots of different points in the value chain, it does become very complex. And so we'll see a really competitive market in the way that then PayTo is brought to life. In some ways, you might think about PayTo becomes the Visa of account-to-account payments. So when you see that PayTo mark on transactions, whether it be websites, whether it be apps, whether it be back-end systems, you will know that this is the way that it'll happen. So there'll be some more standards. A lot of those standards then come to the visibility that consumers will have in their mobile banking apps to authorise payments, to see the payments that they've authorised, and then also be able to manage those payments. But then from the biller's side as well, there's an ability to also provide that level of real-time payments, and they'll see back in their mobile apps when details are changed, they'll flow through. So you've got that two-sided visibility, addresses challenges, issues, risks that customers currently have when they sign up for direct debits or for recurring payments on their cards, that they're not quite sure where that's going to end up. So once the agreement's in place, they'll be able to see that and they'll be able to manage it. Also, once the agreement's in place, there'll be a payment initiation message that leverages the agreement is there. And so rather than having to have another interaction, and then it can be then seamless. So this is where that seamlessness comes back. So the APIs that then use to have instructions that the payment is to go between my account and the account of your business, whether your business aggregating that with your Monoova account or whether Monoova is moving it directly to your bank account, becomes a really seamless and digital experience, become very embedded into your mobile apps. So those of you now that if you've got apps, you know if you're going to receive funds, that PayID is great because you can control and you can really manage the payment that comes in, but it does have a multi-step process where you need to go off your platform and your customer needs to then make a payment from their bank. The benefit of PayTo is they don't need to go off your platform or off your app. It's all seamless. At the moment, there is one time they go off, which is to authorise, but I think that's got some good security benefits to it. But the ongoing, completely seamless within your environment. That's going to change the dynamics of account-to-account payment. Yes, you can do that with direct debit now, but it's got lots of warts all over it. This is a nice, clean, simple process. And then there's the security that is coming from the customer's account. And because it's using the NPP rails, and NPP is all about a push payment, this is an instruction to make a push payment from the customer's account. So yes, we talk about it being a real-time direct debit, but it's not actually debiting the customer's account. It's taking an instruction from you to send money from the customer to you. And that means that it can have the same level of security and the same level of authentication and validation that all other transactions that are moving from a customer's account has. Doesn't have the issue where account details are then published and can be used for other purposes. So I think we've probably got people that are representing all of these different use cases in the room this afternoon, whether you're doing subscriptions or billing, where you can have a payment agreement and then a payment triggered based on a bill being issued or a customer in their app or even online clicking, yes, I want to proceed, and then you initiate the payment against the payment agreement, and that will immediately be validated against the customer's account. They'll see that they've got the funds available and the outcome comes in. You're getting a notification of a successful outcome, whether that is moving between two bank accounts or between a bank account and a payment service provider like Monoova. It means that these types of account-to-account payments can then start to have life in e-commerce. Generally, unless you had someone like PayPal taking on the risk, you probably would never want to have an e-commerce transaction done by direct debit. What it means now is account-to-account payments can start to move into new and really, I guess, growth opportunities like e-commerce and embedded finance. How many of you are doing embedded finance solutions? I know that certainly amongst the Monoova client base, that's a really sweet spot for looking at, you want good payment orchestration. You want to be able to fund your wallet or your account. Now, come back to the point before. You don't need to go off platform to have an account funding. So you can build in triggers, for example, when you get to a certain balance to then top up the wallet. And it'll automatically send out that payment instruction to move the funds from my account over into my wallet. So again, it starts to make embedded finance what we think it's going to be as a very viable alternative to bank account transactions. Because when you think about a lot of things, what the customer really wants is a great payment experience, and banking is quite separate. I think that we'll see PayTo through apps, through wallets and other services become a complementary capability to the bank account. But of course, yes, there will be all those bank accounts that can also do those services. I guess what we're seeing is there's not yet a lot of appetite for banks to integrate payment initiation to top up their bank accounts, and I think it's a great opportunity for those of you that are doing digital wallets, that are doing alternative to accounts, to really start to differentiate from what a bank account looks like to what an embedded finance solution looks like. And then payouts. And you might say to me, well, Nathan, what's PayTo got to payouts? I thought PayTo was about getting money paid to me. But if you think about a payout, if you've got a payroll platform, if you've got a solution which is making payments for small business, you might not want to be the store of value or the bank account provider to them. You could have a payment agreement that means when the customer does trigger that payment to do the payroll payment or to pay their creditor, that gets funded from their account at CommBank, comes in and makes the payment out. So again, because everything's in real time, because everything is authorized, you can have those seamless experiences that in the past you would have had the pain point of the customer needing to pre-fund before they would pay out. Now you can actually have a two-step process that PayTo is able to enable. So, question I'm often asked is, well, where do these payments come from? I think I've given you a hint that many of these payments are going to be brand new use cases that people like yourselves are going to bring to market through the apps and the websites and the business solutions that you're managing. And we've seen this over the last 2 years when we've had the introduction of payment service providers that have joined the NPP community. We've seen a growth in those volumes. We've seen a lot of uptick. We've had payments that have been replaced by the pay anyone type transactions that took place in the first 2 years of NPP. But then since then, we've had tremendous growth in NPP transactions. Yes, some of that has come through COVID, where people are now not giving each other cash and they're transferring funds from their accounts. But a lot of that has actually come from payment service providers coming into the market with pay ID-based solutions and payout-based solutions that have grown the total pool. And that's why we're so confident that those of you in the room that are using payment service providers and see that this is a way of growth will actually bring these new use cases to light. We've seen that direct debit is on the right-hand side pretty static. It's moved from 11% of transactions that are debited from customers' accounts to 9%. But overall, the volumes of transactions that are debited from a customer account has grown 32% over the last 2.5 years. The credit transactions that are pushed from customers' accounts have grown the same though. So we know that when those use cases are available, when it solves a problem, people will move to an account-to-account transaction. So that's why we're confident that getting on board with PayTo early, as it then rolls out across the banking industry over the next year or so, is going to be the right move because your customers will value it. And we've seen that in the UK, where Christian talked about open banking has a payment initiation capability, the growth in new use cases that start to come in once people have this capability does become exponential. This is the growth in payment initiation in the UK since over the last 1.5 years, and we can see that it really does start to ramp up once you get some critical mass. I'll talk a little bit more about then how we might see PayTo and CDR, payment initiation, lining up so that in Australia in the future we will see very similar types of trends. One of the things though is that PayTo, unlike payment initiation in the UK, doesn't need an authorization with every transaction. So if you can have this sort of growth where every transaction has to be interacted with the customer, just think what we can do with Australia, where you only have to have that the first time round, and then the customer has the ability to see their authorization and opt out of it for the future. It becomes much more seamless, much more embedded. But even so, there is trends that we're seeing globally in exponential growth in Ideal in the Netherlands. Ideal's been around forever, but in the last couple of years, since we've had people much more open to making e-commerce and other payments directly from their bank account, we now see that 2/3 of all e-commerce transactions in the Netherlands are made through Ideal. It's fairly similar to what we have with PayTo, but again, each transaction has to be authenticated. If you can have that embedded, just think how smooth that could be in this market. Which is why McKinsey and major global players, WorldPay is the largest provider of payment services in the world, are saying that account-to-account or real-time payments are going to be significant drivers of volume, both either substitution or growth. And I think that this share does come from growth, not just substitution of card payments. I know that a number of you in the room are in the remittance processing industry. I know Monoova themselves are a remittance processor. And I think that if we've talked about what are these global trends in account-to-account payments, the next obvious question is, well, where does NPP sit into that, and what's the pathway for NPP as part of global payments? And I think the first step, and probably where we'll see some real action, is not necessarily in direct account to account and cutting out the remitters, because just as we've talked earlier on around what Monoova's done is taken the complexity of PayTo and packaged it into a consumable business solution. Remitters do that for cross-border payments. So what we will see over the next year and a half with NPP is getting ready to enable remitters to give a real-time credit into a customer's account. Many of you have already solved the cross-border piece. That happens in real time now between the facilities that you have in different markets. Sometimes your slowest path is then the credit into the domestic account. What we'll see from the end of next year is that we'll solve that through having NPP able to do that last leg and credit the customer's account in real time from your accounts or your Monoova facilities into the customer's account at the other end. Over the first 6 months of 2024, then it'll roll out from all of the major banks that are participants of the NPP to the rest of the market that use the major banks and organisations like Cuscal as their processor of NPP payments. And I think we'll probably talk more about that, but I won't dwell any more on international payments at the moment. But clearly, I think that another use case for PayTo is then funding the outward leg. And that's something you can start to do now, that you could have a PayTo agreement with your customers who then want to have from your app to have that transaction funded in real time. So rather than pushing a payment into your account and out, you'll initiate it to happen on your app. Again, a much better experience for your customers that are emitting from Australia. So speaking of good customer experience, speaking of CDR, bringing those together as a PayTo powering CDR payment initiation, this is something we've been doing quite a lot of thinking about over the last year as we've been building our PayTo solution, and that we've been building solutions for CDR data holders. We can see that the consent that happens when you grant consent to share your data can also be used in the future as the same consent for payment initiation. And the use case that I'm going to present to you in the flow is one that we've talked about with Treasury, and they're going, oh, okay, yes, we can see that payment initiation doesn't have to be a something else. It can actually be an and. And the goal of payment initiation under CDR is to leverage capability that's already there and create a really smooth, trusted experience layer for the orchestration. So let's think about a way that we can look at a proposition can be presented to a customer in a mobile app. The customer can then look to say, I'm going to initiate that service and start to use it. They'll give consent to share their data from the data recipient and from their data source, being their bank, to the data recipient. The data holder will then get authorization from that customer to share the data. They'll use their data analytics to look at then how they're going to build that and present a bundled, because we're definitely starting to have conversations, again, with Treasury, ACCC and others, around bundled consent, to look at consenting on a number of different occasions. So at the moment, consent is quite structured, but definitely there is openness to then say, okay, well, if we're going to move this forward, if we need to have payment initiation, that's really 2 consents, and you might just want to bring them into one. But then, if your bank, you've given authority to your bank to share your data, in some respects, your bank could then say, okay, using the rules within PayTo, they can delegate their authority and they can actually say, I trust that my customer has also authorised a payment agreement. So the effectively payment initiation under CDR, which that bank is party to both sides of that transaction, Cuscal doesn't believe, and the position that we're working on and making sure that is being thought about, is that we don't need to wait for another 5 years for payment initiation under CDR while everyone builds another way of working. We actually honestly believe that the consent that the bank knows that the customer has given for CDR can be used as a proxy for the PayTo agreement, and that's already been built and factored in to the PayTo rules. So let's see how I'm going to use this app to start making some great contributions. Oh, okay. Jumped a few steps there, but so I'm going to choose my bank. But I'm going to choose my unicorn bank because Cuscal generally works with challenges and alternatives. Going to send my CDR authentication. Get my password. Choose the accounts that I'm going to then, in this particular case, have data sharing so that I can then share with the What You Can app, and they're going to look at what I can afford to donate based on the transactions that I've processed. So I'm going to share details that also includes enough information with that app that they could then fill out my PayTo agreement on my behalf. So rather than me then having to go and do another PayTo agreement, I can then have these bundled into one application. So part of the arrangement I've got with them and the use case that's been approved for this is that I present that through, confirm my data sharing, and then the population of the PayTo agreement becomes that next step in payment initiation. Now again, in a future world where we have a full payment initiation, we could do this step without having to go through a data share. We could actually just have CDR consent for a payment agreement. But we think there will be many more use cases that will bundle in many more services because they can be much richer and more value added. So now I finalise my authentication and authorisation, but because the bank knows that I've already consented and authorised to the data sharing, they don't ask me to come back to my app. And we've talked about the fact that in this current PayTo, I had to go off your platform and into my bank's app to authorise. We think under a payment initiation world, that will then be able to be managed and maintained on your app. So the idea is get on board with PayTo now, because then you'll be ready for the future when payment initiation starts to work together with PayTo and you don't need to do another build. So Thank you.